Good morning to all traders and welcome to this Wednesday's Market Insights video on metals and energies. We're going to talk about gold and oil today. We've seen gold break into fresh all-time highs above the 2000. Now, the move originally was triggered by an explosion in Beirut. However, the Interior Minister went out on local TV later, said that this was a detonation caused by ammonium nitrate that has been stored in the warehouse in the port somewhere since 2014. So nothing to worry about there. However, we did see the gold remaining at elevated levels, right? That seems to suggest now that it's probably, supported by safe haven demand. We do have worrisome rise in COVID-19 infections, right? We do have geopolitics between US and China taking place once again, and also problematic price inflation that is expected by the markets due to the lower interest rate environment, of course. Now, on the other side, on oil, the API report was very good yesterday. Now we're expecting the EI. The thing is, even before the API, we were seeing the oil trading a little bit biased to the upside. But despite that, don't forget that we still trade in a very, very, very critical range, right? A break above the 42 could mean more upside. A break below the 39 or so could be more downside. Now, on the 1st of August, the OPEC Plus actually started reducing production cuts, right? But that doesn't seem to have affected the oil price so much. At the same time, we've seen Saudi Arabia cutting its official sale price, the OSP as we call it, again in the record production cuts to prop up the market. That doesn't seem to be affecting the market. If we see a good EIA report, that could be the break that we've all been expecting, right? If not, more downside is coming. We're going to analyze both scenarios for gold and oil for more upside and more downside. On gold, I want to go out on the daily chart, guys, today, okay? And because I want to show you what I'm looking at and what I'm expecting, right? One scenario is that we are in an ABC correction over here, right? So that means we've got an ABC and we're going for an ABC over here again, okay? This is, of course, just a simple zigzag, right? So A, B, and C. If we take the Fibonacci extension of waves A and B, we are actually done the 261.8 Fibonacci extension, 1987, which suggests that this is simply a false break above the 2000 and also above the Fibonacci extension. And that will mean that we're going to see prices reversing very, very, very shortly. However, I don't see any supporting signals on the RSI or on the MACD. Contrary, the signals are on the upside since the 1460 low, okay? But I do indeed see more upside on gold if we take into consideration an impulsive move to the upside. With wave 3 being here, actually let me just go a little bit further down. This is wave 1, 2, 3, 4 in the cycle degree, and this is the last and 5th wave, okay, to the upside. Now that means that this is wave 1, this is wave 2, wave 3, 4, a sharp one, rule of alternation being respected there. And as we speak, we are in the midst of wave 3 in the intermediate degree. That means that we've done waves 1 and 2, but we haven't done, have we done? Maybe we haven't done wave 3. And then we're expecting 4 and 5. So there is more upside. This upside could come in two different forms, right? One is this is 3 as the 100 Fibonacci extension of waves 1 and 2, but I don't see that being the case, to be honest. Sorry, actually, let me just go a little bit further back. We are looking at the wave 3 being done over here, okay? And then 5 is going to be anywhere, well, around the 1991 and the 2326, okay? That assumes that this is wave 4, right? Sharp wave 4 over here. Now, if we take into consideration the last move to the upside, we're looking at this as 1, 2, 3, 4, and 5 that can end around the 2326. What else we could do is consider this as 1, 2. This is a minor degree multi-structure for wave 3 that is going to take us obviously around the 23.26. Then we're going to see wave 4 down to the 1991 intermediate, and then we're going to see wave 5, right? Now know that since wave 2 is sharp, we're expecting wave 4 to be a triangle, okay? So the thing is, again, I don't see any signals on the RSI on MACD, so I'm still bullish above the current high, all-time high, right? And I will be expecting to see the MACD and the RSI to show me some sort of signals, at least in the medium term, to consider the beginning of wave 4. Okay. On oil, well, okay. We can start a little bit lower down in the 4 hours, perhaps here, right? Oil has had a very interesting pattern here forming as well. Now, if you recall, we've been talking about this being a wave 4 for a while now, right? So we've got A, B, and C, with wave 4 being done, okay, which means that this is 1, 2, 3, 4, and 5, and this is going to be wave 5 in the primary degree. Now, the other scenario is that we've had A, this is A, B, C, D, and E, which is a triangle, right? And we're going to continue higher for wave C. That would mean that wave 4 is going to go much higher and, well, towards the 54 and then even the 60 levels, and then start moving for prices, start looking for prices to move lower. The other scenario I'm looking at here, which I'm not really sure I'm a fan of. That's why I have it as an alternative, but second-rate alternative. It is that we have an A here. We're still in the midst of wave B, okay, which is some sort of expanded flat, okay, and we're gonna see now 1, 2, 3, 4, and 5 for wave B, and then we're gonna see another move to the upside for wave C to take out 4. And then look for prices to move lower in wave 5. So this will be all for the day.